You are watching Market Watch, the brief overview of the key events from the world of finance. Today, let's start with oil, which reacted violently to the release of data on changes in the Business Activity Index in the manufacturing sector of the U.S. economy. This indicator unexpectedly decreased by half a point, with a projected increase of 0.6 points. A significant deviation from the forecast indicates a slowdown in the world's largest economy, thereby reducing the likelihood of a shortage in the oil market. After all, the longer and more activity in the U.S. manufacturing sector decreases, the slower the physical demand for oil will increase. That is why there was a collapse in oil prices. Recall that since November 2022, the index of business activity in the manufacturing sector has only once risen above 50 points. This means that all this time the main engine of the economy, namely production, has been slowing down, putting noticeable pressure on oil, but not on stock indexes. Although they were under pressure, there were no sales. This can be explained by the fact that the slowdown in the U.S. economy increases the likelihood of a reduction in the key interest rate by the Federal Reserve and as a result, increases the likelihood of a soft landing. When it comes to a soft landing, representatives of the Federal Reserve talk about a slowdown in the economy. Of course, this is negative for the stock market, but not as critical as the crisis. After all, in the case of a soft landing, some stocks may continue to grow, or at least will not fall. Most likely, this position allows key stock indexes to keep from declining, while the US dollar has noticeably weakened in tandem with most currencies. If the situation does not change and the U.S. economy continues to slow down smoothly, then a bearish scenario for the U.S. currency will be a priority in the longer term. Shifting to the cryptocurrency market, let's pay attention to the obvious weakness of buyers. Bitcoin and Ether continue to trade sideways, indicating that there is no reason for growth. Given the fact that both coins are trading in close proximity to the historical maximum, the reason for purchases should be weighty. If it does not appear in the coming days or weeks, then the risk of developing a corrective decline will increase significantly. It is important to take this into account for those traders who actively buy, especially using leverage. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.